Good morning, everyone. Welcome to another edition of Roadhouse Last Call, the pre-market show. Tells you stuff about such and whatnot. Today we got the Bender, we got the Stockington, and we have myself, Hells Bells, discussing things that need to be discussed. Bender?
Good morning.
Yeah.
Good morning.
Is it a good morning?
You know I can't tell you that yet.
Oh.
I need a little time before I decide. I'm just going to say yes. How about that? And then I'll figure it out. And maybe I change my mind later.
Yeah, I'm going to go the other way around. I'm going to say it's not.
Well, we might as well just end this show.
Yeah, it's crazy, dude. It's like, just depending on the morning, it's like, so I wake up, start sorting through some of these headlines, and it's like, oh, there's a headline that says we fucked. Oh, here's another one that says we fucked. Oh, there's another one that says we are so screwed. And yet another one that says, yeah, no, there is no hope. And another one that says, yeah, no, we all did. It's like mornings like that with those headlines, it's just like, how many different ways? And it reminds me of going back and reading contracts. It's like you have a client or whatever, and you get a contract from the opposing party that they wrote, obviously. And every single line within that contract is built around how their client maintains all rights and your client is taking it in the ass. It's just like, it's so one-sidedly just biased that it's just like, oh my God. So you're telling me that there is absolutely nothing good or positive in the world in any capacity to talk about today. And it's like, and then so I'm sitting there and going through these headlines going, it's like anybody that's reading this, that is any type of a casual observer of the market, there is no reason for them to hit any button on their portfolio other than sell. That's it. It's like every single headline is saying sell, 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 because you dead. You way dead. And then it's like you start putting your mind together on it a little bit. Let's say you had $1 million at the beginning of the year within the market. Let's say you're lucky and you have about 700,000 left, but just with the market doing what it's doing. They're forcing you to make a decision based on these headlines. Do you want your 700,000, or are you okay with it going down to 400,000 on that milli that you had?
Isn't this just rinse and repeat? Like, that's the game that gets played, right? Like, until they, the more headlines that come out, and the more people that sell, the more opportunity they have to pick it up cheap, and that puts more money on the sidelines. So as soon as it turns around, when it does finally, turn around, and eventually it will, don't know when, but when it does, then you have, the fuel chasers and whatnot. You have money on the sidelines that listen to all the headlines and, sold probably near the bottom. I'm not saying that's where we are now. I'm just saying that when they do capitulate and the headlines reach them and they hit that sell button and they start liquidating all those positions, it's like the ones that unfortunately that sell at the bottom are going to be the ones on the sidelines going, well, I would have had my million back if I would have just held.
And the ones that ultimately end up rechasing the top.
Yeah.
Yeah. No, it's bizarre. It's like, even, I'll give you an example of one of the headlines. It was regarding Apple, basically saying that Apple is not priced in for a recession.
Yeah.
That was it. So I'm reading it, and it goes through and says like, what Apple has been through many recessions and comes out great on the other side, and but that's always been based on a product release or product development. You realize that the last time that it was faced with a recession, that it didn't have any type of services revenue.
Yeah.
And services right now make up a pretty hefty bulk of their overall sales. It's like the article just completely ignores, like a key aspect of their business model. Just totally ignores it in every way, shape, and form. It's all just meant to, hey, we really need Apple to drop another 10 to 15% in order to get a bottom on the market. So anybody hanging out there, sell, sell, sell. It's like, again, some of this stuff is so disingenuous. And even from the standpoint of Fed speak, again, quite disingenuous. It's like you're doing everything that, according to any textbook that's ever been released, is how to induce a recession. The Fed is like going, okay, number one, number two, number three. They're checking all the boxes and be like, no, we're not trying to force a recession. No, we're not. We're not. It's like it's just so utterly disingenuous. It's mind melting. So, and then it gets into, so for the show, it's like, I'm like, okay, so what headlines do I put out there? What is the key buzz? And it's like, the key buzz is like, we're going to be fed more doom and gloom as the world awaits Powell's testimony, as he says exactly what he's been saying while offering absolutely nothing new of any circumstance. That is really the only thing we're hanging on right now, is Powell for the next 2 days. That's it. With Fed speakers going off every 15 minutes between now and the end of the week, it seems like, if you're going in and sorting through it. So again, it's like we get held hostage, and here we are. It's like, so we had the bounce, could be looked upon as being technical because there was not a headline or anything saying we should have bounced. We get a bounce, then today is a risk off, and let's see what happens next. We're not getting anything from anybody as far as improving the narrative. This whole thing, as far as eliminating the gas tax, it's cute, but historically it's been proven to not be effective for anybody. So we have that. We have more of DC doing absolutely nothing. It's like, I think the funniest thing that I read was Biden basically saying that the Chevron CEO is a little bit sensitive, that he didn't believe that they had feelings, something along those lines. I thought that was funny. Doesn't do anything for anybody, but at least there was some humor in it. So I don't have any headlines other than, if we want to go ahead and summarize the headlines, the market today is basically telling you, grab lube or don't grab lube. Either way, they're coming for your ass. That's what the headlines are basically saying for the day. So Bender, with that in mind, what you got for us on these levels, buddy?
Yeah. So obviously that line from yesterday, 37.36. Once we got above that, we got a really nice move. Hopefully y'all did okay yesterday. We had, mostly, at least while I was here, mostly trend day up. I think that changed a little bit in the afternoon, but I wasn't around for it. What I'm looking for today, the levels that I'm looking at, below us, we're at 37.14 right now. So obviously 3,700 whole number, and then 36.92 and 36.80. Those are kind of the levels I'll be watching. Don't want to see, really don't want to see it give up that 36.80. You've got above, we've got 37.29, which is the 50 MA on the 60 minute. 37.45 is that trend line. Yesterday, that line was 37.36, and where we're at today, it comes in closer to 37.45. And then above that, you got 37.65. So if, yesterday, 37.36 was big because it was a moving average and trend line, that previous trend line. Today, that number is 37.45, but it doesn't have the same significance because the trend line doesn't line up there. or the moving average doesn't line up there. But you still have that trend line. So that's the level, that I'll be watching closely. On the 60-minute, you've got the 20 MA at 37.39. So those are the kind of the levels that I'll be watching above and below.
Okay. Well, so if we're looking for, glass half full, so we'll pretend for a minute based on some of these things. This little drop is giving us a gap fill. Got that going for us. So we filled that gap that we created on Tuesday. Outside of that, it's like based on Bender's lines and what I'm looking at it, if I can translate it to SPY a little bit, I'm looking at 373, maybe tops. Unless we get some type of a catalyst, if we are going to bounce 373-ish, that level. And then on the underside of it, we have to look at the lows from last week, as far as seeing if we can double bottom out and make some type of a move. Outside of that, it's like if I were to talk about flow a little bit, flow was chock full of shots, both to the upside and downside, with very little continuity. As far as what the overall theme was, at the end of the day yesterday, I said that I did not like bull flow coming into today's open, and unfortunately I did not pick up puts on that. But it's like it was within the mix. There really wasn't anything, I would say, super actionable after the gap yesterday. We did a lot of wibble wobble. There were individuals, like you could have scalped Tesla to the upside probably 35 different times and done well. But Apple was not moving and dancing. Microsoft was not moving and dancing. Semis were not moving and dancing. There just was not a lot of movement and not a lot of activity really pushing to the upside, other than we got some repositioning of puts with higher strikes, which was positive within the moment. Now we have to see what they're going to do intraday with some of that rolling that they did yesterday, whether they roll up or down, and what activity we're getting into. And I'm going to say specifically your Apples, your Tesla, your Microsoft, semis, what are they doing? It's like, are we coming back in and we're now looking once again at 125-ish Apple puts? Is that going to fill the page? Or are we going to be filling the page with 140 Apple calls? It's like, I don't know. But that's one of the things to look at. It's like, are they going to double down on some of that TQQQ activity that they were hitting on yesterday and re-add on those positions? Or are they going to cut and go ahead and start just smashing SQQQ calls? I don't know. There's some decent lines on TNA yesterday. Some decent lines kind of polka dotting everywhere, but nothing, again, and I want to say this, with any continuity. It was just random shots being taken. So with Powell testifying both today and tomorrow, I don't know what expectations we should have coming into the day, other than the headlines are saying we're all fucked. Flow is lacking any type of, and I say the word again, continuity or real defined direction. So usually when that happens, we chop to chop down, and resistance absolutely becomes resistance. That's why I'm going to look at that 373 number on the SPY machine, and that's why I'm going to keep an eye on the lows from last week, because it's like that range is enough to keep us nowhere. And until we get some type of a catalyst one way or the other, I think, the road to nowhere absolutely leads right into where we are right now. You have anything on that, Bender?
No.
Yeah. Stockington put out a list yesterday, and it was funny. I saw his list, and I was looking at it, and I was like, everything on his list, it was just horse shit as far as flow. No upside targets being offered. And lo and behold, his list is looking very, very much like there could be some good downside activity over there. I'll let him get into that. Stockington, what you got, bud?
Hello. Good morning. Yes, I'm here. So Gap day. Put some new lines in here. Can go through that. My thing in the back of my head today, I like the Hell's ism, whatever you want to call them, of the Fed. We're playing Russian roulette with the gun to our head. Click, click, click. So my Russian roulette of the day is my dog eating trash and me having to go to work. Russian roulette. What am I going to come home to on the just? That's my scary thought of today. But anyways, getting into these charts, I've got, let's see, so Amazon, Swan's got Amazon and Baba. We both got Amazon and Baba on the list. Our triggers are close by a few cents apart only. I've got a little bit of more of an aggressive call trigger that I put out here on Baba at 104.32.
Where'd you go, buddy?
Some dark pool.
Did we lose the Stockington?
No, he's still talking.
I'm here. Maybe Hells can't hear me. I've got puts below 103.35. AMD, I put a chart in here. I'd be looking at long, maybe if it can hold over 83 or puts below 82.6. To me, this looks like bearish reversal channel. I can get some. I didn't do the trend lines in the chart I posted, so I'll add it with those. And then Microsoft, I'll be looking at over 250.1, and then potential puts if we went below 248.05. Let's see. So yeah, that covers it as far as the watch list. UVXY, we have some dark pool below at 16.02. So that would be something something to be aware of. And then SPY, I dropped the charts in there. I stole that blue diagonal line from Bender's ES chart as just kind of like a downtrend line. You can see there on the 1 hour chart that line has been very powerful recently and in the past, even going back further. So the fact that we lost that pre-market, if we went up and tested that and held below, I think we could see some more downside. That's it for me.
Thank you for that. Hells, can you not hear him?
Yeah, no, I can hear him now. I had to
Okay.
go to, yeah. He mentioned UVXY. A couple of things I want to point out on there. We have to look at that 1670, 1680 level as far as it rejects. If we get up and over 1670, 1680, somewhere in there, the whooping stick is going to be absolutely severe to bull. 1670, 1680, right in through there. We have to be very, very cautious of that level. Extremely cautious of that level. I can't say that enough. It's like the whooping stick will be severe on a break over that. We'll probably make a quick move to 18, fast and furious at that point if we penetrate that level. I just can't find anything within the mix today as far as what's being offered up, as far as positive vibes for bull. But again, we have to ask the question once again. It's like, how much of this is priced in? How much of it is not? What are we dealing with? And usually the flow does a fantastic job of telling us. My expectations for the next couple of days are very, very minimal until Powell is done babbling, and we can see how the market is going to react. So my trading is going to be severely limited this week unless I see a setup that makes sense. And I think that it's okay to not enter into the fray if you don't have a real good feel as far as what's going on, what the story is. So if you can't find anything inside of the narrative, if you can't find anything inside of the chart in order to take a position, and you can't find anything within the money and or flow, if you can't find any components within those three areas that say, hey, I need to get in and trade, don't trade. Don't trade. If you cannot find anything within those three pieces, what are you doing? And so that's my mindset coming in. If I can be opportunistic and find an opportunity, I sure as hell am going to take it, but I'm going to be extraordinarily selective at the same time. Anyways, that's all I got. Got anything, Bender? Got anything, Stockington?
No. I mean, nothing new. I guess put your lines on the chart and follow your rules. Don't trade price and what you see and not what you. I have to remind myself of that all the time. Like it's not what I think. It's what I see, and just trade the lines. Respect those levels.
And that's and again, Bender said it. It's not what you want to see. It's not what you want. It's what actually is. It's like if you just that simple little rule, simple little concept, will take you very, very far. All right, guys, we have about 19 minutes until open. Al is set to begin his testimony, I believe, at open. So we'll just go and deal with it from there. Anyways, I'll have a good 20 minutes, and we'll see you back here then. Thank you, Bender.